Hey guys, hope you're well. Weekly IBD 50 video sponsored by MarketSmith. There's a discounted trial available in the comments below if you are interested. What we're going to do in this video is look at the SPYs and also the SMH ETF, which is a large semiconductor ETF. They're potentially building head and shoulders bottoming patterns. Then there are four main areas of the market where I'm seeing a lot of strength. So I'm going to show you the relevant ETFs, whether it be on a sector, industry group or specific theme ETF, so you can see what it is I'm looking at. So let's begin here with the S&P 500. So potential inverse head and shoulders type pattern forming. Now there's an hour left on the 12th of Jan session when I'm filming this. There was obviously the CPI report which came out in the pre-market today. Overall a fairly good reaction to that, couple of shakeout demand tails, and we can see here on the weekly chart, just reducing the noise, potential head and shoulders bottoming pattern with the left shoulder, the head, and then the right shoulder. Now on the weekly chart we've had two bullish weeks in a row with strong closes getting back above all of those key moving averages. So I think this here is very interesting. From what I'm seeing on an individual stock basis, especially in specific areas of the market, it's generally acting better, starting to see more and more setups form. We then take a look at SMH, and there's a lot of semiconductor stocks, some of the smaller and mid cap names, some of the larger cap names as well, which are acting better. So similar head and shoulders bottoming pattern here potentially underway. Left shoulder, head, and then a right shoulder. Two bullish weeks in a row now, getting back above all of those key moving averages, somewhat breaking this downward sloping trend line as well. So I think that there is there's very interesting. You then go and look at the likes of say an Nvidia. Also similar pattern with this potential head and shoulders bottoming type pattern going on. RS line now starting to turn up too. So you have some of the bigger boys like the Nvidias of the world, and then you have some of the quicker movers like an AEHR of the world, semiconductor stock, showing an awful amount of relative strength here in a good way. So the semiconductor stocks which are looking fairly interesting. But let's now start dialing into pockets of the market that I think are very interesting, which we're going to start off with precious metals and precious metal miners. So you can find some decent videos on why people tell you that the price of gold is going to go up significantly in coming years. So for me, with a Wyckoff background, I would expect to see a very large cause if those kind of price targets are going to be met. And this here on the monthly chart, GLD as a proxy for gold, this is one of the largest cup and handle patterns that I've ever seen, especially in my kind of trading career and lifetime. This is a over decade long cup and handle here. So in terms of a causality point, there's a lot of causality here. Now price is back above its monthly 10 EMA. That's where the fun really begins. Whatever sector ETF or kind of theme or industry group you're trading, above the monthly 10 EMA is always a good thing. That there is where the fun's going to happen. Now gold actually has a history. It's a fairly long history. You have to go back a little while ago, but it actually has a history of being able to break out of bases and run pretty well. So the best indication of how a potential asset, a financial instrument, whether it be a stock, a commodity, a crypto, is going to run is how is it previously run. Well, you can see here, builds bases, trends well. Builds bases, nice kind of flag type pattern here, trends well. Builds bases, tightens up, runs pretty well. So it's going to be interesting whether this can start continuing building bases and moving higher. But that then feeds into other areas of the market, such as SLV. So this is silver. It doesn't look as strong as gold, but if we go onto the weekly chart here, you can see this potential cup and handle now starting to form here, volume drying up in the handle. And then when we start looking at those individual ETFs that are related to the precious metal miners, we've got GDX. We'll take a look at this on the daily chart. So GDX breaking out of this cup and handle. So there's the cup, there's the handle, and then breaking out of the handle. Look at this RS line turning up, good volume coming through on the breakout as well. All the precious metal miners are acting well. SLVP, this is the silver miners ETF. So you can see this head and shoulders type pattern, this here being the left shoulder, this being the head, this being the right shoulder over here, then breaking out. Look how the RS line is turning up. So precious metals and their miners are looking fairly darn interesting. Then on the commodity theme, XES. Now this one here is the ETF for what is currently ranked the #1 industry group in MarketSmith, which is oil and gas field services. So on the ETF, which is XES, take a look at this cup and handle. See this cup and handle building here. It's actually trying to break out of the high of it is actually going above the high, but it's breaking out of this little pivot here, which was around the 10 week as well, which is that red line you see there. What do you notice about the RS is turning up, and then you have individual stocks within this ETF acting very well. Halliburton, Schlumberger, ticker 9, you got HLX, you got WFRD, OII, a lot of stocks within this kind of theme industry group of the market acting very well as well. So that there is an area of focus. Then you've got the main oil and gas ETF, which is XLE, potentially building a VCP. So you can see it here. See, big old VCP. So it's building these high lows, potentially tightening up there. Take a look at the RS line. Go down to the daily chart. Okay, you can see this on the shorter term time frame as well. So it's putting in these high lows, starting to tighten up. RS over the last couple of weeks, generally speaking, has been turning up back above all of the key moving averages. Looks interesting, trying to break this lower pivot in here as well after it consolidated around the 1021 and 50 SMA. So that there's looking interesting. You can see what happened last time. It kind of consolidated around those levels as well. See how the volume dries up, really nice pivot, and then a significant uptrend came out of that. So the precious metal miners, the gold miners, the commodity related in terms of energy, oil and gas stocks looking pretty strong. Some of the solar stocks now are starting to display some real bullish synchronicity. Still think this is an almighty flag building here. You can go listen to Tony Seba's YouTube videos. Now, just because you watch YouTube video on why solar is likely going to be in terms of energy and how we're going to use solar over the next 5 years, 10 years, just because you watch a video on a Monday, it doesn't mean solar stocks are going to be breaking out on a Tuesday. It just doesn't work like that. But if you take a look here, we still have this potential for a very large flag, and it has a history. This is nice when you think about stocks and how they run. When the sector ETF can trend this well, so out off of the COVID lows, see how the 10-week, which is this red line here, which is the 50 SMA on the daily chart, see how well this encapsulates pretty much the whole move until you get that bearish change of character up here. But this flag is forming nicely on a, well, I'd still say this is a long term now, on a long term moving average, not a moving average, relative strength line. See this relative strength line, short term, intermediate term, and a longer term. I would say this is in the context of an uptrend, and this is looking very interesting. When you then go and look at some of the individual solar stocks, like a Canadian solar, look at this bullish price action coming through. Now, short term, these are extended. They need to tighten up, set up trigger bars, one or more key moving averages, but take a look at the volume coming through. And this isn't just this stock here. You're actually seeing some volume move in on some other stocks as well. The likes of a First Solar looks very, very strong. Looks like a leader. See how this is moving back in to 52-week high territory. Now, short term extended. Fidelity moving in the most recently reported quarter, so it now needs to tighten up. But solar's looking fairly darn interesting. Some of the uranium miners are coming back in, so I don't think the flag is as strong as, say, we're seeing on solar stocks, but you can see here potentially setting up a break of this downward trend line, building higher lows. RS line over the last month or so has been turning up. So some of the uranium stocks like a CCJ, it's going to be choppy. These are not going to be easy to trade, but potentially some large flags building here. UEC is another one. See how it's starting to tighten up around a clustering of key moving averages, going into this quasi kind of apex formation. DNN is another one. See how it's building these higher lows, trying to break this downwards trend line. Had been clustering around key moving averages, volume trending down, RS starting to turn up. So uranium is also a pocket that I'm looking at. And then finally is Biotech. And I'm going to go onto the daily chart for IBD. So here you can see this VCP action. So contraction 1, contraction 2, and then then contraction 3 over here. And what I like at the minute in terms of the reference point here for IBD, and then relating that back to individual biotech stocks, which are setting up and look fairly strong, is it's now clustering nicely around the 1021 and 50 SMA like that. So it's not kind of short term like we're kind of seeing with some of the solar stocks in terms of the ETF as well. On a short term basis, extended IBD here is looking very interesting, like it wants to have a go at cracking out of this base. So RS has generally been turning up, volume's been drying down as that there is the VIX. That's TC2000 yelling at me that the VIX has now just gone sub 19, which for me is into the money bucket volatility regime. So volatility dropping as well is very, very good. Then something else to be keeping your eye on. If I load up UUP as a proxy, something else to be keeping an eye on is this here is the dollar. So proxy for you can use DXY and use UUP. The dollar breaking down as well. So volatility going down. The dollar breaking down like this as well. This is very, very, very good to see indeed. So let's see if that trend continues for the dollar. Week over week, month over month, breaking down. Invariably, if you're trading this style, the better trading environments are going to be when the dollar week over week, month over month are breaking down, and volatility is either trending down from a very historical high level, or is sub 19 in the money bucket volatility regime. Money fleas assets were rising and high volatility, CIXOs were falling and low volatility. So that is it, guys. I will wrap it up there. They are the areas of the market that I am most focused on. It's going to be interesting whether the likes of the SPY can try and have a crack at breaking out of potentially that head and shoulders bottoming type pattern. So thank you very much for watching. I'll see you in the next video.